Now, reinsurance is a contract between the actual party, that is the insurance company. Insurance company has undertaken more risk or burden on its shoulders than its bearing capacity. Insurance company has undertaken more risk or burden on its shoulders than its bearing capacity. Good morning and welcome to the third session in Unit 1, third semester BCom Insurance Management, where we are going to talk about management of risk by individuals. Now, starting here, we're going to talk about the word called as reinsurance. Now, reinsurance is a contract between the actual party, that is the insurance company, and that of two or more insurance people who are going to join hands, in which a portion of risk or loss is going to be transferred to another company. This happens when an insurance company has undertaken more risk or burden on its shoulders than its bearing capacity. Now, that's a very, very important term for all of us to know here. The reason here is that now when an insurance company takes that responsibility that I can go ahead and give a backup to another company or to individuals way beyond its capacity, then it's going against its threshold limit, which means the risk factors would be very high. Now, in order to mitigate that risk, somebody needs to back up the insurance company itself, and that's where reinsurance comes into picture. Now, double insurance thus is a device to reduce risk. So on the whole, we are trying to understand how to reduce the risk factor, and that is very important. Usually, an insurance company ensures a profitable venture comes its way, even if the risk involved is beyond its capacity. By transferring the risk to any other insurance company, the insurer reduces his liability. Now, that's very, very important for all of us to know why we are going here, because we want to reduce the liability factor at any given cost. Followed by which, we are also going to talk about something called the definition of reinsurance. Now, it's an arrangement where the insurer who has accepted an insurance transfers a part of the risk to another insurer so that his liability is limited to a figure proportionate to his financial capacity. Let's take an example for here. Now, let's say that LIC, that's the Life Insurance Corporation of India, has got a financial capacity to manage about 1 lakh crores. But then the insurance liability or the risk factor is more than 1.5 lakh crore. Then it needs a backup. It needs another insurer who can manage that proportionate 50,000 lakhs plus in order to, in the situation, the 50,000 crores has to be managed by somebody else. So that's where a reinsurer comes in and takes over that financial liability. In other words, Rigel and Miller says that reinsurance is a transfer by an insurance company by the proportion of its another company. So that's exactly where we are working towards this particular reinsurance. Now, what are the features? The first one is that reinsurance is a contract of indemnity. It's an insurance contract between two insurance company. Relationship remains with the original insurer. The reinsurer is not directly liable towards the asset or towards any of the financial liability that we are talking about. So at any given point of time, the person who goes there, he is directly involved and not the reinsurer. In reinsurance, the insurer transfers the risk beyond the limit, not the every factor. You cannot transfer the entire financial liability on others. Reinsurance doesn't affect the right of the insurer at any point of time. The original insurer cannot do reinsurance more than the insured sum. That's also important. And it can be possible in any types of insurance. The fundamental principles of insurance are applicable also in reinsurance. So pretty much we are talking about the same kind of insurance business. It is bound only by those liability in which the insurer is legally liable. So it has got a whole lot of properties that we need to understand, and insurance is not going to be a common man's business just like that to go forward. It is a kind of business where you need to understand the risk proportionate factors. So you cannot just take risk and start telling people that I will cover you up at any given point of time. If you are not able to manage the risk, you find that at any instance that you are not able to cover up for all the measures, for all the promises that you have given to your investors, to your people out there, to your customers, you need to go for reinsurance, which will take care of your proportionate risk factors. Followed by which we are talking about the merits. The merits are there. It's a security for the insurers, and then it increases the capacity of the insurer. It reduces the situation of uncertainty. That's a very, very important term. Now, we all know that the insurance company itself works on an uncertainty factor. We are never certain about our life. We do not know what's going to happen the next minute. So when insurance is a picture, is a business that talks about the uncertainty moment, that talks about those emergency situations which a man is not able to handle by himself because of the financial liabilities that start looking at him, insurance becomes the godfather. So reinsurance is the father of the godfather. Why? Because in any point of time, that uncertainty which cannot be even handled by the insurance company, reinsurance is going to take care of it. So you need to be very, very clear about how does this happen. It encourages new and small insurers to undertake the risk and remain in business. It makes possible for the insurer to insure catastrophic risk like flood, earthquake, cyclone, and normally such risks are not insured. So now what happens is that geographically, if you are located in a place where you find that you are not able to understand, you're not able to move further in terms of the climatic conditions, and your business is subjected to any kind of natural calamities, then the reinsurance doesn't come into picture at all. Now, it also brings stability to earning of profits, stability in terms of reducing the liability. It's also about the solvency of the business that can be carried forward. It reduces unhealthy competition since most of the insurers cooperate with each other. And in reinsurance is more useful for new insurers who bear the risk losing capacity altogether. So it ensures the goodwill of the insurance business as it undertakes different kinds of factors altogether. Now, whenever we talk about insurance, we also need to understand here that the concept of reinsurance is primarily being spoken about because in case if it's a new insurance company and they are not able to bear the risk, the reinsurance company will give the assurance saying that I am there to help you out in case of financial liabilities. Secondly, now the reinsurance factor gives you a profitability stand measure by saying that you concentrate on your regular business. In case of emergency, we are always there to back you out in terms of financial measures. So most of the companies always feel that the possibility of running an insurance is only there when you have a sound backup, when you have a person who gives you the assurance that in case if something goes wrong, I'm there to help you out. So that's exactly why the merits of reinsurance is visited upon. Now, moving further, we also need to know the advantages of the insured. He gets the goodwill of two insurers, which is very, very important in this case. It's protected against the bad effect of insuring. The insurance also gets advantage to insure with anyone for the large sum, and insuring against catastrophic risk and all those kind of things is also, which is normally not done by the insurance company, is taken care by the reinsurance factors. So sometimes, for the insurance company also, you start seeing that this is a huge advantage because we are getting some sort of benefits that is actually going to help us to run the business smoothly. With this, we come to the end of this session, and in the next session, we're going to talk about some functions, history of insurance, uncertainty and risk, and principles of insurance factor, which we are going to cover in detail. I hope and believe that all the facts and figures that we have spoken in this session would be of a great help to you, both in terms of theory as well as in the practical walk of life. In the upcoming sessions, we are going to have a deep dive into the following topics, and I believe that this would help you to understand this subject in a better way. Until then, stay tuned, stay blessed, and have a great day ahead. Thank you once again for joining me today on this wonderful session. You have a great day.